here with Ultimate Private Money. Today I want to talk to you a little bit about why 10% is such a magic number when it comes to investing. After all, how did this come to be? Most of the time when you talk to people that have invested in the stock market, this is the number that's been told to them of what the market has done historically on a compound annual basis. So if they are shown a graph of the stock market, say from 1920 until 2010, you will see that the stock market has roughly gained on a pre-tax basis 10% per year, or so the industry data goes. There's a lot of studies that both support and refute that, but the fact of the matter is this 10% number has been ingrained into the psychology of many investors. What you'll note when you start raising private money is that most of your investors are going to be experienced with investing in other vehicles, such as the stock market, mutual funds, their 401k, maybe they've done some stock or real estate investing on their own a little bit, perhaps through a real estate investment trust or maybe a rental property. This 10% number is also the first number that's thrown out when I talk to a lot of real estate investors that I teach about how to raise private money, because they feel it's the baseline number for return on projects that they can pay. Well, I want to break down at least one myth for you today about 10%, and that is that it doesn't need to be a magic threshold number for you. It means if you don't offer 10%, it shouldn't be a deal killer for your project. Is it ideal to offer returns that are competitive with other asset classes? The answer to that question is yes. However, you don't want to starve the cash flow of a project. A real estate investment many times will take a few years to fully develop, particularly if you're dealing with larger multifamily or commercial projects. So to promise to pay a steady return of 10% on money may not necessarily be feasible for your project, so you might handicap it cash flow wise. Second of all, if you advertise returns of double digits or more, which is another reason why this is such a threshold, is that it goes from 9.9 to 10%, and that investor psychology kicks in. Like, wow, at 10% my money will double roughly every 7 years. But you don't want to get too caught up in this, because as you grow your business, you'll want to offer different returns to different investors for different types of vehicles that you have. For instance, if you're offering an equity investment in your business, maybe in the form of an LLC interest or an LP interest, the returns may be 8% up to a certain amount, 10% over that amount, 15% over that amount. Real estate is the greatest asset class because it's the asset class that you can be the most creative with. So don't pigeonhole yourself into a 10% return. Because it's a double-digit number, because it's been told to investors for so long that have invested, been marketed to by the stock market, that it's the best return that you can hope for in the stock market over the long term. Don't neglect that 10% return is achieved through a lot of up and down movement in the market, which is disconcerting to many investors. You can save them from that up and down movement that looks like a heart monitor when the market goes way up and then it goes way down, by offering them stable returns and tax advantage returns in your real estate investments. So don't get too caught up or too focused on 10% being a magic number. Look at what your project can provide. Look at what your investor wants. Maybe they want monthly payments, but they'll take 8% interest. Or maybe they want one payment a year, but they want 10% or 12%. Work the numbers, work with your investor, and come to a win-win situation. But don't fixate on this 10% number unless it's something that you want to really work at and become known for. Because once you promise returns to one investor and that starts to get out, if your next project can't pay that much, but you still need to raise the private capital for it, you might be crimped for cash flow. So set your business up for the long term, match the return of the project to the investor, and you'll be very happy with the result, and so will your private investors. So thanks again for watching today, Ultimate Private Money. Check the site out regularly, as we'll have great information to help you continue to thumb your nose at banks and hard money lenders, raise low-cost money for your business, and continue to grow and build wealth in real estate.